Good evening. Today is Friday, March 7th, and this video will be a recap of the stock alerts that were posted by Stockwits Academy, which is an online trading group. So this video is for Friday, March 7th. I'll be reviewing them on the 5-minute chart, which is what I like to trade, and it will give you an idea of what to look for before you enter the trade. They'll be reviewed in the same order that they were alerted today. So if you look at this chart here, you can see that they're in order by the time they were alerted. And also, this is a legend of my moving averages, so I have everything color-coded, so it'll give you an easier time to look to see what I'm talking about. And I also mark these levels, which are yesterday's high, yesterday's low, the 60-minute opening range high, 60-minute opening range low, and pre-market high and pre-market low. So those are the levels I usually mark on a daily basis on each chart before I get in. Okay, so let's look at Tesla. The alert was given at 7:35. So this is the 5-minute chart. So at 7:35, you can see that's right around here that this chart was not setting up for a call at that time. You can see here that price stayed on VWAP, which is the purple line. Your MACD was not in an uptrend. It's too early to see if your moving averages were in an uptrend. So if you just wanted to watch this chart, you would have seen that it eventually broke down and price started to fall through all the levels. This is yesterday's low. This is opening range low, pre-market low, and all the moving averages started to go downwards, including MACD. So this would have given you an opportunity for a short on this, on Tesla. If not, if you were still looking to get in long, and you waited for it to bottom out, which was right around here, and it reversed. So once your moving averages started to go into an uptrend, MACD curled and started to go up. Your 8 SMA crossed over your 20 is usually a good indication. And so, but you did have a bit to get through. You had to get through VWAP, you had to get through these levels, but if you got in here, you did catch some upside to that trade for the day. So that was Tesla. Next, we have Apple. Apple was called out here. You can see it's 7:36. So let's look at the chart here for Apple at 7:36, which would have been right on this candle. So you can see here, this chart was setting up nicely. All like MACD was in an uptrend. All your moving averages were in an uptrend. Price was right on VWAP and crossed over. So this was setting up nicely, but unfortunately it did have a rejection here. So what Mike usually says is like, don't jump into a trade as soon as it's alerted, wait for the pullback, which is what you would have gotten here. So you got the pullback to the 20 SMA. If you wanted to enter here, this would have been a better entry point at that time. And then you had to sit through some chop where it kind of went up and down. And then here's where it set up nicely. Your moving averages started going into an uptrend again, and you caught some upside here. You could have caught a quick scalp here and sat through these green candles, or like I said, waited for the pullback. But even then, you would had to sit through this chop where you lose, value because of time decay. But ideally, this would have been the place to get in on when it kept rejecting off of this green line is yesterday's high. So you can see it went up, came down again, and then finally went up. And then it crossed the 60-minute opening range as well. So you could have caught some upside there on Apple. Next was CELH. So let's look at CELH. The alert was given at 7:40. Not sure what happened here, but I assume it was March 7th. And again, like Mike says, don't play the 0 DTEs. He just calls them out like that, but your best bet usually is to buy them a week out. Okay, so here's CELH given out at 7:40, which would have been right on this candle here. So again, this chart was setting up nicely. Price is above VWAP. MACD is in an uptrend. All your moving averages are an uptrend. You could have gotten in around that point, knowing that like this pink line is the 60-minute opening range level, and a lot of times price does reject at the 60-minute opening range. So it'll hit, so like my time is 8:30, but Eastern time would be 10:30, and that's another thing I want to point out. All of my times are in Mountain Standard Time. So my market opens at 7:30. Eastern Time is 9:30. And so price a lot of times rejects at the 60-minute or sometimes the 30-minute as well. And that's what happened here. It rejected at the 60-minute, which this is probably the 8:25 candle, which so would have been right on that 8:30 time, which is an hour after market opened, 60-minute opening range, and then it rejected down. So if you did get in here, you have to be aware that it could possibly reject here, and normally it does. So then you could have, in this case, reversed and caught some downside. And then, of course, this was the nice trade for the day if you'd have got in here. So you can see here that price rejected off the 113 EMA. That's this black line. So you had a clear rejection there, and then it started to go up, and then your moving averages all moved up. It crossed over VWAP and kept going up. So you could have caught a really nice upside to that trade today on Friday. Okay, next was PLTR. So let's look at PLTR. That call out was a call given at 7:40. So let's look at PLTR. 7:40, so this is similar. If you were getting in, you could have caught some upside, but again, see where it's rejecting on the 60-minute opening range. So this candle is, this is the 30-minute because this candle is 7:50, which is 8 o'clock. So that's the 30-minute opening range, but it's also the 60 because price never crossed above it again. So it rejected after the 30 minutes and rejected down, crossed right down, and then went down to bottomed out here. So if you're watching this trade again, you don't want to jump right in. And this one wasn't even setting up that nice because you can see the moving averages. Some are going up, some are coming down. MACD is going up, but just the fact that you've got moving averages coming down is risky because it's not all trending the right way. So again, it did reject here, went down. So if you would have got in down here, and this pink line is the 60-minute opening range low, and the red is the previous day's low. So this was yesterday's low. If you had it marked out, you'd know to watch those levels because there was a potential for a rejection there, which is exactly what happened. And then price went up. You can see here it fought to get over VWAP, and you had to take this huge rejection candle here. Usually your ideal point is to wait till it crosses over VWAP, and then obviously you had some clear upside to it. And then this was yesterday's closing price, and it rejected off of there. You can see that. I don't have that marked out because I don't have to chart it. That price just automatically shows up on my chart. So the light gray line is the previous day's close, whereas I mark previous day high and previous day low. Okay, so that was PLTR, Palantir. And so this, you could have caught a nice upside on this trade, whether you entered right when it crossed, after it crossed VWAP, or entered on the rejection down here. You would have got a nice upside to that trade. So that was PLTR. Next we had coin. Coin was called out at 7:41 and it was a call. So let's look at coin at 7:41, which is right around here. So again, the chart was trying to set up. MACD was in an uptrend. Moving averages are an uptrend. But of course, you've got this, which is your 113 SMA going flat. And then, of course, it rejected here. And this was at 7:55. So at 8 o'clock, the 30-minute opening range, it rejected and then fell down and then went opposite. So you could have switched over to a short at this time. Obviously, this was a big rejection here. Some chop here, and then of course there was your downside there, and then your price reversed, bottomed out right around here, and then you could have caught some upside to it there as well. So that would have been coin. Next we had MO, and if we looked at different time frames, we might see what it rejected off. Like the 5-minute, it's not showing, but let's look at the 10-minute. Oh, what time was that? That's at 9:50, so let's just look at the 10-minute. There's nothing there to show it was going to reject. Well, and another thing to point out too is when the price goes way outside the Bollinger Band like that, there usually is a pullback. So price is not, and on any time frame, as soon as price gets way outside the Bollinger Band, there's a pullback, which there was here, and then that's where you caught your reversal. So let's see if that showed here. So it wasn't so much outside of the Bollinger Band on the 5-minute, But if you look at the higher time frames, it was definitely outside of the Bollinger Band. Here's the 15-minute as well. And let's see what it did on the 30-minute. 30 minutes, see there too, it's outside the Bollinger Band. So in all the time frames, price, as soon as it starts to drop outside of the Bollinger Band or go up outside of it like it did here as well, then it's going to pull back, which it did, and it reversed. So there was your reversal. So that was coin. Next we had MO. MO, I'm not even familiar with that one. Okay. So MO, the alert was given at 7:42. Okay, so this chart, you can see there you had a really big green candle here on the 5-minute, and the alert was given out right on the 7:40, which is this candle. And again, you know, this chart is trying to set up, price is trying to go above VWAP, everything's in an uptrend. But once you have a big candle like that, like you're getting into higher risk. If you were getting in here and you've already missed the big move, you know it's going to be risky. And then, of course, it rejected here off of the opening range, which at this point was a 30-minute opening range. It did do a false breakout here and came back down. So that was risky, getting it at that point. If you did, you sat through some chop. Hopefully you got out there, and then it just dropped from there. But you definitely need to be mindful of the opening range high, which is on the 30-minute or 60-minute. After MO, we had Meta. Meta was a call as well, called out at 7:42. So we'll look at 7:42, which is right around here. So this chart at this time would not be a good entry point, because you can see that your moving averages are sloping down. Nothing really was sloping up. MACD was in a little bit of an upslope, but it's not strong. A strong MACD is when there's a bigger gap between these two lines. Like for instance, down here, there it's narrow, it's not strong, it's not looking strong at all. You didn't want to get in at this point on this trade. And of course, it rejected off the opening range and dropped way down. So this would have been a good opportunity for a short on this. And then obviously catch a reversal here. Everything did seem to kind of reverse right around that time of 10 o'clock, which again is my time, which would have been noon Eastern time, and then caught like a nice, beautiful upside to this trade. And then here again, you can see you would have had a lot to get through, which is like your VWAP, some of your moving averages, but it did push through, and you would have caught a nice upside to Meta. Next, we had UNH. Bring up UNH. And that was a call given out at 7:46. So if we look at 7:45, that's right here. So again, rejected off the opening range, and you had to sit through some chop, but this chart was looking not bad. Everything was in an upswing. You didn't have any moving averages coming down from the top. They were all coming up from the bottom. So you could have gotten in, but then you would have had to sit through some chop, because it was going to keep rejecting off the opening range, which it did, and finally it broke through. There is kind of like a rule of 3 that the third time it'll break through. So if it hits once, twice, and then the third time up and over, there's that to watch for as well when you're looking at a rejection point, that it could break through on that third attempt, which it did, and you would have caught some upside to it. So you could have caught some upside to UNH on that alert today. Next, we had Amazon. Amazon was called out at 7:53, and it was a call. So let's look at Amazon at 7:53. So this just looks like some of those other charts where nothing is setting up. You've got moving averages coming from the top down. This isn't set up, so if you'd have watched, it rejected off the opening range, and then of course dropped down and reversed at 10 o'clock. So that's kind of the pattern for a few of these, and that's what happened there as well. So that was Amazon. Next we had GDX. Okay, GDX was called out at 7:55, which was right around here. So this was called out right when it was going to be rejecting. So again, You don't want to jump in on a trade as soon as it's called out. You want to watch and see what's going to happen. It rejected here off the opening range high. So you could have caught the reversal here and caught a nice downside to that. Again, this is just like all the others. If you were watching, caught the reversal here and then caught an upside to it as well. So that was GDX. Next, we had MARA. And this is a call as well at 8:06. So 8:06 was right on here's 8:05. So right here was the call out. Again, chart looked not bad. Everything's in an uptrend. MACD is looking good, but again, you've got your opening range where it rejected and then got really choppy. If you're watching this chart, you could see that it rejected here off the 200 EMA, and this is where you got the reversal, and then you could have caught a nice upside to it there. And again, it's right around that 10 o'clock time when everything did reverse. So you didn't have a good opportunity for a call there, not even really a put because it was so choppy. It never really gave you a nice direction, and then obviously the reversal here, and there's your upside to it. So that was MARA. Next we had SMCI, and it was a put. It was called out at 8:31, and again, these are all 0 DTEs on Friday, but to be safe, you want to buy at least a week out so that you've got some room for a bit of cushion. Okay, 8:31, so that's probably right around, 8:30, right here. This was called out as a put. Okay, right, so this is a put. So you can see here that it is already rejected off the opening range, and it's starting to fall down. If you had watched this chart, and you see that your moving averages were all trying to move down. MACD was trying to move down. It did reverse here, but you can see here it rejected off of VWAP, which is the purple line, and then caught more downside to it. So a put was a possibility here if you waited for the pullback, which was to VWAP, and then obviously the breakdown. You could also be watching the 9 EMA, which is this dark green line, and you can see that it never closed above the 9 EMA, indicating it was going to continue in the downtrend, which it did, and then you could have caught a reversal here and caught the upside to it, which was right around that 10 o'clock time, noon Eastern. That was SMCI. Next was HPE, which was also a put. HPE is Hewlett Packard, and that was called out at 9:35, and that was a put. Okay, so this chart, with this call out, obviously there was already a big, huge drop to this chart. So looking at a put at that time, which is 9:35, this chart is kind of already bottomed out. This is your opening range low, and it never really broke up below that. So there wasn't really an opportunity for a put there. These small little candles means like price is not moving a lot. It's already dropped a lot, but you have no big reversals, big candles going up. So if you did watch it and you wanted to get in or for a call, there wasn't really a lot of movement. You can see how small the candles are and the wicks, but it was a slow little uptrend to this trade here at this point. And you can see here MACD was on a long, slow uptrend as well. So you could have got in for a call on that trade, but definitely not a put because it never broke below the opening range low, which is this dark pink line here. So that was HPE. Next was KO, and it was a call. So let's look at KO, which is Coca-Cola, and it's a call at 9:35. So let's look. Oh, this chart looks nice. So 9:35, which was right. Where were we? We're quite high up here. Okay, so the call out was given here. So if you're watching this chart, at this point, everything was still looking good. It was like this is a nice trend. Everything was trending up. MACD was in an uptrend. All your moving averages are in an uptrend. You've already passed pre-market high. You've passed yesterday's high. You've gotten over the opening range. It's broken out. So the only thing with this trade, the only downfall is you've already missed a lot of the upside to it. So if you did get in at 9:35 when it was called out, there was still room for upside to it. So you still could have made money on this trade. But again, you've missed a lot of the upside already on it. So that was KO. Next was AVGO. AVGO, and this was scalping this one. So this was a call given at 9:45. So if you would have gotten in here, and this was to scalp it, you would have, if you'd have got in when it was called out, if you looked at the chart, you could see that this chart was setting up nicely. Price did get over VWAP. Your moving averages are moving up, are in an uptrend, and MACD is starting to climb up. So if you wanted to get in on this trade, usually like I would wait for a confirmation over VWAP, which it did, and then you would have caught like a beautiful upside. The only bit of chop was right here, but price never crossed below the 9 EMA, so you could have just rode that 9 EMA all the way up. So you would have got a nice upside to that trade, so that was a great call out on AVGO. Next was SPY at 9:59. Let's look at what happened to SPY. SPY at 9:59, and this was 0 DTE, and he had on it extreme risk. So this was a call at 9:59. Okay, so that was perfect because that call was called out right when the whole market reversed and started to go up instead of down. So if you would have got in right around this time, like he said, it was extreme risk. You could see that it just kept bouncing off this bit of resistance right here, and then it did reverse, and then you would have caught a nice upside to this trade just on all those green candles alone, which was 4, 5, 6, 7 green candles alone. You did, if you held, you would have held through a big drop there, but it reversed right away and then continued up. So that was a great call out on SPY. Like he said, it was extreme high risk, but that worked out perfectly. Next was Pfizer PFE. That call out was given at 10 as well, which was, oh, and this one was one of the ones that didn't follow the trend for the day. It didn't do a big drop and then a reversal. So at this time, you could have got into this trade at 10 o'clock. Everything was looking okay. Price was above VWAP, but you were below this opening range, so it never really crossed over. So usually if you get in under that, you know you're going to hit a point of rejection, which it kind of rejected here, and then went back down. So it would have been risky getting in at this point, knowing you're going to be up against this rejection, and you can see this level, and you can see it never even made it there. So that was not really a good entry point at 10 o'clock on this ticker. If you would have waited till it rejected off VWAP down here or touched down, you could have caught some upside right here, but your entry point would have had to be down here when it touched off VWAP. So let me just move over. Yeah, it almost got to VWAP. So if you entered there, you could have caught some upside to this trade right there. So that was Pfizer. Next we had UPS. Again, this one's 10:03. Hopefully this is one of those ones that's rejecting or reversing at 10. Let's just have a look. Oh, this one was super choppy. Okay, so at 10:03, right around here, yeah. If I would have looked at this chart, I didn't trade this one. I don't even think I looked at this one on Friday, but when I see all this chop without a clear direction, it's pretty risky to try and get in. So, you know, you can see here it's trying to get over the opening range. Remember what I said about the third time? So here it touched, it's 1, 2, 3. You could even almost count it as 4, but it did cross over, then it kept rejecting off, and it acted as support, and then it did catch some upside. So you could have caught some upside on this trade, but like this was just so back and forth, so much chop. It did crossover, and it held, but then it really didn't give you a lot of upside. And when you hold through all these up and downs, you're just losing value on your contracts. So it's not worth it. That was UPS. Then we had Tesla again. That was called out at 10:04. So let's see if this one is one of those perfect reversals. It is. Okay, so this was a great call out. Again, market was reversing right at this time. You got in. You'd had a lot of levels to get through, cross VWAP, get through the opening range low, get through yesterday's low, but you would have caught some upside to that. And of course, that was catching the reversal of the day. Next was WBA. It was given at 10.18. WBA, is that Walgreens? Yeah, it is. Okay. So WBA was a call given out at 10.18. Okay, so this chart looks just like the other one we looked at. I can't remember which one it was, but where it's had a big, huge jump first thing in the morning, and then it just trades sideways all day. So when you see this and all your moving averages are either sideways or you see these weird lines like this, then it's just not worth it to try and get in. So there was really not much of a trade on WBA today. That was at 10.18. Then we had 10.27 was Dash. Let's look at that one. So that was at 10.27 Dash. So again, this was the reversal of the market for the day. If you'd have got in, great trade. You'd have got a lot of nice upside to that. Next was NVDA. This was a call at 10.34, and this had extreme risk. Let's just look at why. 10.34, which should have been right around here. And yeah, it was extreme risk just because it had all these moving averages to get through, all these rejection points, trying to get above VWAP. So if you'd have gotten in and been patient, or not gotten in and been patient, waited till price crossed over VWAP, which is right around here, but it was still super choppy. You could have traded that, but it would have been a horrible trade to be in because there was so much choppiness to it. So that was NVIDIA. Next we had TSM, and that was called out at 10:36. Again, 12:36 Eastern time. So 10:36. So again, the market is reversed. 10:35, which would have been right around here. You already know the market is reversing, but you're rejecting off VWAP here. So it would have been risky getting in there. Your ideal point is to wait till it crosses over VWAP here, but it still had some levels to get through. If you held, again, it was an ugly trade, but it did have some upside to it. So that was TSM. Next we had ARM. ARM was called out at 10.44. So 10.44. ARM. Oh, this looks beautiful. So this would have been called out there. Again, oh, sorry, that's my dog coughing. Again, if you had looked at this chart, ideally you would have wanted for it to wait for it to cross VWAP, which is this purple line here. So you can see it was trying to go up and down over VWAP and then finally crossed over, and then you could have rode the 9 EMA on this chart. So that's the dark green line, or even the 8 SMA, which is the pink line. You could have rode that, price stayed above it, and you'd have had a really nice trade on ARM today. And that was called out at 10.44. So that was a great call out and a great chart, great trade for ARM. Next we had Microsoft. And that was a call given at 10.54. So this is not as clean as the ARM chart. So let's look at 10.54, which would have been right around here. Right here. So when the call was given, again, dropping below VWAP, your ideal point was to wait till it crossed above VWAP, which had happened here, and then you would have caught some upside. Again, not super clean. There was some upside to it. Obviously, ARM was the chart that was the one to get into. Next, we had BBY, which is a swing, which I don't usually review the swings. We had ASTS, was called out at 11.41. So let's just look at 11.41, which would have been right around here. So this chart, 11.41 there. This chart, when it was called out, prices had already crossed VWAP, and everything was moving up. So all your moving averages were going in an uptrend. This the 113 SMA was the only one which wasn't, which isn't a big deal if all your moving averages are going up and one is kind of coming down, but it's not a super steep slant. You can see it's just a sloping down and it has to curl up. So this would have been a good entry point on this trade, and then you would have caught some upside to it. So that would have worked out okay for you. That was ASTS. At 11:41. Next, we had FFIE. That was a swing. TQQ. Okay, 11:48. Let's look at that one. TQQ 11:48. So that would have been right around here. So again, you've already missed a big part of the reversal, but your price is above VWAP, so you're not fighting that. Most of your moving averages are moving up. You've just got a few that aren't. So this would have given you a little bit of an upside for a trade for the day. Not a lot, not a big gain, but you would have got some gain out of it. So that would have been okay because, like I said, the market is reversed. It's going up. You've gotten over your major levels, which is VWAP, and then it just stayed on the 9 EMA here, and you would have caught some upside to it. So that was TQQQ. Next, we had PINs, which was a swing. That's a March 21st. We won't cover swings. PDD is a swing. Next, we had ORCL, and it's at extreme risk. So let's look at ORCL. And again, these are called out as 0 DTEs, but if you wanted to get in and buy a further next week's expiry, you could, even though it's extreme high risk and you're still getting in, but at least then it reduces the risk. So this was ORCL at 1222. Which would have been right around, way up here now, 1222. So that's why it was extreme risk, because even though it's all moving upwards, you've missed a big part of the move, and so it's like how much upside is left to this. It's breaking out of the opening range, which is your pink line here, so you can see it set the opening range there, dipped down, went back up. So it didn't reject, it did get across, and then it offered some support. And so you could have caught some upside to it there, because once you're across, but ideally, the way a lot of people play the opening range breakouts is they wait for the pullback. So it did cross over, it's going to pull back, and then there's your upside right there. So you could have caught a bit of a trade there. It wouldn't have been huge percentage, but you would have caught a nice little bit of green trade on ORCL, on Oracle. Next we had SPY again was a call, 0 DTE, extreme risk. That was at 1227. So let's just look at that one. Again, 1227 would be 227 Eastern time. So where's 1227? Right around here. And that was a call. Oh yeah, okay. And so it was just, trying to determine if this upside was going to keep going, because it had rejected here off the 200 EMA, like touchdown, caught a pop back up, but just wasn't going to happen. And it's trying to cross over your opening range here. So it kind of does the little fake out, goes across, comes back down, but see how it didn't hold as support here? It went down to the 20 SMA and then still tried to go across. It was fake breakout again, and then it dropped below. So this trade did not work out today, the SPY 0 DTE call at 1227. Oh, sorry, that's my dog. He gets this little coughing spell. Okay, next we had Snow was a swing, TECK was a swing, PayPal was a swing, QCOM was a swing, even though I don't really call March 17th a swing, but let's look at TECK. Let's see what time was that given? 12:38. Yeah, because when you're getting in so late in the day too, it is more of a swing, because you're not trying to catch a trade that late unless there's like a clear indication. So then we had QCOM, which was at 117, and that was that's March 14th as well. And we had CHWY right at the end of the day. Okay, let's see what happened with CHWY. Why was that called out? That was at 118. So yeah, there was something going on there that's trying to catch probably this reversal here or catch VWAP. But anyways, that didn't work out. And that's so late in the day. If anything, you're going to be buying into next week and treating it as a swing, but it wasn't really a good call for today at 118. I'm just trying to see what what they were trying to see here was maybe the reversal off the VWAP. I see. And because, see here, it rejected off VWAP, went up, and here it did, you had a 5-minute candle close above VWAP, but it didn't hold, and then it dropped back down. So, and again, sometimes when you see this tweezer top, they call it, it does signal a rejection as well. So, and that's what happened there. So that was not a trade. I mean, obviously the trade for CHWY would have been earlier in the day, and it would have been on the put side and then a call side. That's how the whole market worked on Friday. So yeah, it was, you had opportunities for puts and then opportunities switched to a call. But obviously you had to be in the right stock and be ready for that move, which, I mean, no one knew how it was going to turn out. But anyways, that wraps up the recap of the alerts that were posted for Friday, March 7th. And I hope this video helped you and helps you know what to watch for when the alerts are posted. So good luck in the markets on Monday, everyone, and have a good evening.